Tuesday, September 5th, Stan Ehrlich, market analysis. And I start out with the stock market indexes, typically speaking. The S&P 500 in particular and the SPDR exactly. So what do we got? A slightly lower market this morning. The SPDR is down about 3/4 of a point, not much. Same for the DIA, the Dow Jones, and the QQQ is up a point, a little higher. So we have a mixed bag. But the bigger picture is this potential head and shoulder top forming. And we have a rare example. Last year, in June, you formed the first shoulder. It was actually a double low, and the first shoulder was actually a head and shoulder bottom in itself. The October 13th low, which we caught with a bullish engulfing buy signal at the bottom of the bear market, and the very day the bull market began, was also a small head and shoulder bottom by itself, only taking approximately 1 month to form. And it worked. That's 2 in a row. Those 2 time frames amount to the shoulder and the head, and the last shoulder low was in December of 22. No bullish engulfing, unfortunately, not that uncommon. And that bullish head and shoulder bottom was really the big pattern that started the long-term bull market that I believe we are still involved in. Despite the fact that I'm about to predict a sizable break into October. And this is only, again, the 5th of September. So we've got approximately 6 weeks of potential, if I'm right, decline. Here we go with the pattern that started to develop in June of this year. We had a rally high. It got overbought, and there was a small, typical, normal downside correction in a bull market. And we bottomed out on June 26. Up we go. Now, much more profoundly, we got into a major resistance area and into overbought conditions, and we got a bearish ER sell signal, which causes the price action to turn red the moment, the tick that it happens real time, and down we go. We went down into August 18th. Now that is only a few weeks ago. We got oversold. It got down close to the first low, the pivot point from the first shoulder high to begin the rally into the head of the formation. And again, that was June 26th. So the 2 lows on August 18th and June 26th are about the same prices, which is pretty normal. In fact, this low is a little bit higher, which is even more normal for head and shoulder top formations. You can see them flat. That's very rare. You can see them downward slanted slightly. That doesn't happen all that often. It is this combination that is most common. Now we have rallied out of the oversold condition, a test of support, and the pivot point, I think, for the last rally to make the last shoulder high, which I said on Friday. I thought that was it. Why? We bumped against a gap closure price range. Couldn't quite do the job. We'll get to that later, maybe November, December. And it did have an outside trading range, but this is one of these very rare, and I nicknamed it a bass backwards, because it's, if it had closed lower on Friday, we would have had a bearish standard engulfing candlestick, but it didn't close lower. It had a bullish candlestick. But the problem is it's close to overbought and in a resistance area and at a price level, therefore, where you would expect it to start to turn down. And guess what? We do have that happening so far this morning, and not particularly aggressively and not a lot. Now, it did make lows lower than last Friday. Remember, yesterday was Labor Day, so it was a holiday for this particular symbol or instrument. So we made a new low for a couple of 3 days. That's nice. helps me look good. And the high today is around unchanged from Friday. Same thing. So I think we're starting to work our way down. And then I can claim that, yes, I picked this last shoulder high before it happened. I talked about it happening 2 or 3 days earlier. So far, so good. Now what? Don't tell me what happened. You can see that. Tell me what's going to happen. Well, supposedly we're going to start to head lower a little faster. And I would expect at the end of this week, we might be down to, I don't know, 444. Yeah, something in that line, 445, 444. And we're at 50 right now. So that's not really all that big a break, 5 points in 4 days, but maybe a little bit lower. But the point is, start to come down. Now, my commentary here about the S&P is going to be the same damn stuff for the DIA and the QQQ. So continue. And it should come down relatively quickly. Now, that means maybe 2 to 3 weeks from now, all the way to the neckline, and that is 433. Now, that's 17 points from where we are. That's a pretty big move, but ladies and gentlemen, that's half the way down for this pattern. Now, when you get to the neckline, it's supposed to drop below the neckline sharply, quickly, maybe with a downside gap. Gapping across the neckline is not uncommon. And then you'll be considering a downside breakout of a head and shoulder top that had its high last Friday. This will be a week or two, maybe 3 from now. And we're on our way down to 405, 406. Call it 406. That is my minimum downside objective for this pattern. It's pretty darn big and sizable. Do you understand? This is the biggest downside correction we will be having in this bull market, if I'm right. We're going to get down to support areas. We're going to get down to where the market was, going way back over a year. But there's a heck of a lot of variety of support areas close to the downside objective. We'll see when we get there. Obviously, I'll fine-tune commentary, but that's the picture here. I do not want any higher highs. The timing I talked about for the last week and a half was yesterday, which was a holiday. I didn't realize that until, a few days before the holiday. So Friday is a day early and today's a day late. So a day early Friday last week is pretty close to being right on time so far. See what happens next. Down we go, in my opinion. Okay, the story in the DIA, we have a bearish engulfing, but it wasn't an ER sell signal because we weren't high enough. We didn't generate overbought conditions at the same time or just a few days earlier. Therefore, it's not red like the 2 different bearish engulfings during the top formation when we had those in on July 27th and on August 4th. No bearish engulfings in the first shoulder, which has a companion shoulder. I see this first rally in June 15, 16 as the first shoulder. Now there's a little bump in here. I call it a companion shoulder, and it drops down. So there's actually 2, maybe 1.5, so to speak, shoulders on the left side of the head of the formation. And now on the right side, because these are very symmetrical formations, typically, historically, I've seen thousands of these in the 52 years I've been technically inclined and charting, originally for a decade by hand, and then finally with CompuTrack, the very first technical analysis software written for the Apple II and the Apple II Plus, 1977. So, double shoulder on the right. There's their symmetry. We had a bearish engulfing on August 24th. That could have done the trick and caused a breakout, but it didn't. It got a little tricky on those couple of days. Then we have a rally and another bearish engulfing just Thursday of last week. Started to come down on Friday, with a lower high. The close is a little higher. And today we almost made a new low since Wednesday of last week. I hope we will. I think we will before the day is out. We're very close to low and last right now, and everything is sinking a little bit, not much. So head and shoulder top, my favorite technical analysis formation, seems to be forming again. They're not that rare. They happen a reasonable amount of time. All kinds of markets worldwide. So we have a shoulder high on the QQQ on Friday with a bearish engulfing. Unfortunately, again, it wasn't quite overbought. It got darn close, but it wasn't overbought. So we're coming down a little bit this morning. At the moment, we're still a little higher, a point higher, 90 cents. But I'm hoping we can make new lows and stay there by the time it closes. And this is 10 o'clock California time right now. I got 3 full hours, plenty of time for this market to come down and start to make new lows. The pattern is the same. The timing is the same. The prices are a little different. The angle of the neckline is a little different, but everything is adding up so far for this to be the beginning, except for, of course, the highest high back around July. This really to begin the next big wave down to reach its minimum downside objective for the Qs. It'll be 321-ish. And I am hoping, crossing my fingers, that it's going to be in October again. Last October was the most profound October lows I have seen for, well, maybe forever. So it was a whopper, let alone the bottom of a head and shoulder bottom, which I didn't expect at the time, of course. Now, the head and shoulder in the Qs has already come true. It's already reached its minimum upside objective and surpassed it by quite a bit. So that's not in the ballpark, that's not in play anymore. The downside objective is in the ballpark, by the way, of a Fibonacci 50% correction. Very interesting. So if I'm right, in October, we're going to have a low that's around the 50% correction for the fib number, plus it's going to meet downside objectives for the head and shoulder top, plus it's going to be oversold, I hope, and start giving buy signals. That'll be fantastic. Something akin to last year. All right, enough of that. I'm not going to go into the Russell today. It's just dropping off very sharply and is not quite the same situation. I'll talk about it tomorrow probably. So let's go to futures. Now, the E-mini, of course, is the S&P. It's got the same formation. You've got your inside shoulder, and you've got the double shoulder as a result. You got the head of the formation. You got a bearish engulfing smack dab on top of the market, the high day. In fact, we have a bearish engulfing the previous day and the complementary 2 days later, 3 days later, another bearish engulfing that really is the beginning of the slam dunk here. Came down, got oversold, got the bounce. It looks like the timing is right. It looks like prices are at the right levels. It looks like on a scale of 1 to 10 that this is probably an 8, 8.5. Formation is very good. Don't see much wrong with this whatsoever. It's hard to come up with perfect head and shoulders. They just don't really happen very much. Now, let's look at interest rate futures. Now, what does the stock market not like? Higher interest rates, which means down on the bond futures. Unfortunately, we'll see how this works out. I'm looking at a bullish pattern here. In fact, it's a head and shoulder bottom, maybe. We are at about the same point, interestingly enough, although the pattern is much smaller. This is only 1 month in size. The last shoulder low of a head and shoulder bottom in bonds. So if bonds start to work its way higher, the stock market is going to be inclined to act, I think, favorably, which I am not forecasting. So there's a juxtaposition here. I would rather be bearish on bond futures, but unless we start making new lows, I can't be. But if it starts to make new lows in bonds, then I have to turn to being bearish. Right now, this is the head and shoulder bottom in the making. So there's a little zone here between today's lows approximately and the next couple of days timing wise for it to turn up and be the last shoulder low. If that doesn't happen and we start to see it fail and everything falls apart, bonds will start to agree with this bearish push in interest rates, bullish, I'm sorry, for actual rates going up. And that, again, is a little bearish for the market overall. Okay, do we have the same thing in 10-year notes? I didn't go in the right direction on that one, so let's go to NASDAQ. I already talked about NASDAQ, I think. Maybe I didn't. Same head and shoulder top formation, same shoulders, not the pattern has not been drawn in. All right, back to bonds, now 10-year notes. Hey, things have gotten goofed up here. I'm sorry to say I'm going to be in random order, I think. Crude oil, very strong last 3 days, overbought last 3 days, plowing right through a major resistance area, which has stopped it, even with a bearish engulfing sell signal that worked out very well August 10th. Dropped off very nicely for a couple of weeks, plenty of profit potential in that. So are we going to top out again? Yes, probably. We're overbought, and quite a bit so. We're RSI is up to 86, which is not to be ignored. In fact, I'm looking at the RSI chart right now. You got to go all the way back to June of 22, where we had 3 bearish engulfings at the top, including the highest high, and we got the top of the bull market to the exact day back in June of 22 with an RSI that was equivalent to this one. Yep, around the middle of 80s, right where it is right now. This could be a high day on crude oil. I'll leave you with that. Next, heating oil. Yeah, I seem to be back in groove here. So I really can't say too much except that we're close to being overbought, but not there. And we're very, very much in an area of historical technical resistance from over a year ago. The market has topped out every single time it's gotten up into this price range, as high as about 3.45. And here we are at 3.26 and very close to the high of only about a week ago. The 2 previous tops, we caught the high on the first one to the exact day, and that's why I built the ER Signals automated trading system, period. We also got the high back on March 9th, 22. That's the first one on this chart. Well, maybe we got one back here also, but that one's perfect. That one's only 2 days off. That one's perfect. Are we going to see another perfect? Stand by. I think it's topping out. Spider. Sorry, natural gas. Sorry. And the spider is dropping. There we go, down $1.24 and $1.26 lower in DIA. And now the Qs are only up 60 cents instead of 90. So everything's slipping a little. That's what I wanted. We gapped down this morning on the natural gas. It's been a big sideways trading range. We caught a variety of tops or very close to it, not quite the high day, unfortunately, and one good buy signal on the way back up. So this very broad trading range, we're still in it. The long-term trend is obviously still down. So I'm expecting support to be challenged, which is the red zone. But I think there's a chance it could be broken, and we're going to see natural gas, excuse me, drop off a lot more. First, let's get to 2.48 area. Next, gold. I can't believe how fantastic the precious metal markets have been this year. Now, unfortunately, we did not get a bearish engulfing red sell signal on gold on Friday, and that was Monday. Gold was open on Monday, sorry. But it was an outside up day, which is a bass backwards, and it's proving to be correct because we're sharply lower this morning. and could even make new lows. We're close to the lows. So that was one of my backwards reversals. I don't have a good name for it, backwards. We got the high of the rally on the gold market, and we got the bottom of the break in the gold market. Let's go, and I'm bearish, looking for lower levels, looking, in fact, for a test of 1,920, something like that. Next, silver. I got to go back to March 10th. We bought the bottom. We sold a high. We sold the high. We bought the low. We sold the high. And we sold a complementary, a few days later, another rally high. We bought almost the bottom just on August 17th. I can't believe how many signals have been that good that fast. And now on Friday, we have Monday yesterday, the holiday throwing me off a little. We have another bearish engulfing ER sell signal official. And look what happens today. Wow. It's just a little mind-boggling sometimes how good these signals have been with gold in particular, silver, and how about platinum? Holy moly. We had a sell signal on Monday with platinum also, after a buy signal at almost the bottom on August 17th. And let's look backwards in time a little bit here. We got a high January 11 this year. We got the low February 27th. We have one bearish during a top formation. Unfortunately, it wasn't the highest high, like I love to see these things. But the high yesterday in platinum was the highest high for the rally, up against some resistance, and we gapped down. Now remember, you guys have heard me say this 100,000 times. Gaps are like a black hole in space. They tend to pull the price action, suck the price action back into the gap, and that is not to be ignored. In the next few days, maybe it'll take a week or two. Sometimes it takes a lot longer, but usually not. We're going to rally back up to 966.67 or whatever the exact low was yesterday. And that low was 967.40. Maybe a little higher than that, but that would be this exact price. Sometimes the gap is not closed 100%, maybe 90, but the concept is there. So, considering this dropped off so much this morning, it may take some time for it to come back up and close that particular gap. But I'll put a marker there, and we're going to be tracking it as time passes. I'm looking for a breakdown into the 900 area, or maybe a hair under 900. Next chart. High-grade copper. I'm going to pass. We got some great turns. We sold the last top, and we got the last bottom, but signals are not the greatest at the moment on copper. Next. Soybeans. Dropping off more. Talked about the upside exhaustion gap the day it occurred, overbought conditions, likelihood of its coming back down some, and that's exactly what it's doing. So will it come back all the way into the blue zone? You can't rule that out. It's quite possible. That would be my best expectation at this particular point. Come back down a little below 1311, maybe as low as 1280. We did get almost a high day with a bearish engulfing. And there's some other really good sell signals and buy signals, but nothing super profound like precious metals. So I'm a little bearish on soybeans for a week or two. Next, bean oil. We got the high on bean oil to the exact day, and it was a second high of a double top formation. I want to see a little bit more weakness. It started today. I want to see it close below the lows of the last, say, week or so, and then below 60.60, give or take a little, and challenge the little red zone around 58. So let's get there first. This looks like a double top formation to me. The downside breakout would be below 57.95. That would cause a downside objective. I'm just going to eyeball this real quickly to approximately 51.50. Next chart. Bean meal. bearish, looking for lower levels. Not too much to say. Next, new lows, slightly slow bear move, corn, looking for lower levels. If you break below 472 on a closing basis, it's just getting more and more bearish. Next, wheat has already done that. 2 or 3 weeks ago, we broke below lows of a few months earlier, and now we've been slowly moving lower. Another new low again today. I really don't have a downside objective per se for wheat. It's pretty low historically already. I'm just bearish. Next, live cattle. Possible head and shoulder top, broke out to the downside on August 15th, rallied back up toward the neckline for rally high August 28th, and today we're bouncing a little bit. I need a close soon, maybe this week, below 177 to keep my bearish expectations. I do not want another close or a close above 182.5. That would cause me a lot of concern about this bearish formation that so far is so-so. Next, hogs. Not really too much to say. Long-term bear trend, looking for a bearish engulfing or a sell signal, something to grab onto to talk about from a bear standpoint. Otherwise, momentarily kind of neutral. Next, OJ. We had last week a bearish engulfing, which to the almost exact tick is a double top formation. Again, the downside breakout is closing below the lowest low between the two highs. That's 304.20. And we're a little lower today. I think this week we might be able to close below 304.20-30 area. That would cause me to be increasingly more bearish and look for a minimum downside objective in the ballpark of some support at 279. Next chart, cocoa. An outside trading range day with a much higher close likely today, but our high today is almost to the tick. The same high that we saw in a gigantic bearish engulfing that worked incredibly well for a day and a half back on August 7th. So this is the makings of a double top. You can't go higher than today's high. Oh, maybe a little, but only for a day or two in a very little amount. And it has to fail right away. Today's perfect. All we need to do is go south now. But the current strength is a new high close for the whole trend. The fact that it's an outside up day and maybe one of my bass-backwards reversals remains to be seen could be true. This is going to be interesting the next day or two. Normally, this price action is bullish, but in an overbought condition and at previous highs so accurately, I'm flipping the other way completely. You do have another little gap to close down here, by the way, only from about a week ago, around 3,500. Next chart. I got coffee. Bounced off of support super accurately. Gonna have a double bottom if it keeps going up. Next chart. Sugar. This kind of kills, but it really doesn't. My downside objective of around 20. This is overbought conditions. Now, true, it's a new high ground, and it looks like it's going to close well above the previous highs for the whole trend. Normally extremely bullish. Let's see how it handles the downside correction it's about to have, because remember, it's overbought, and it's almost always going to have a downside correction pretty quickly. One caveat here, we have a history of being overbought for an extended period of time with sugar. So there's a chance it could continue to run for a week or two or three. I just don't know. I'm really a little lost at this one. Cotton. New high close on Friday. Actually, that was yesterday. I'm sorry, Friday, September 1st. And all of a sudden, it drops right back down again and starts to make lower lows for a couple of days. Now, it's come back slightly at the moment, but I think it's going to start to trend lower again. Every time we've been in the vicinity of this red resistance area, we've turned yellow and had a correction. And 2 times ago, we had a bearish engulfing, and it didn't work very well. It was just barely a profit potential there, but a little bit. So I think it's going to go back down, but I haven't got a lot of handles to grab onto. Resistance, yes. Overbought, yes. But there are some bullish aspects of this as well at the same time. Got to pass on that one. We're back to bonds. We've seen it, and we're back to the E-mini, which is just stable at the moment. You guys have a great day. Talk to you tomorrow. Hope you enjoyed your Labor Day weekend.